Hello, I'm Sebastian. Welcome to 9 Trees podcast. Today, I will summarize and review the book, Wyckoff 2.0, Structures, Volume Profile, and Order Flow, by Rubén Villahermosa positions itself as an advanced technical analysis guide that updates classic Wyckoff methodology with modern market tools. Rather than treating price charts as isolated patterns, the book frames markets as an auction where professional money leaves footprints through volume, structure, and the way orders are absorbed or aggressively executed. Villahermosa connects the traditional Wyckoff cycle of accumulation, markup, distribution, and markdown to practical chart reading, emphasizing context, multi-time frame alignment, and decision points where professional money leaves footprints through volume, structure, and the way orders are absorbed or aggressively executed. The added focus on volume profile and order flow aims to help traders identify where trading activity concentrates, where liquidity is likely resting, and how price reacts when it meets those areas. As part of an advanced course series, the book targets readers who already know basic charting and want a more process-driven approach to entries, risk, and trade management grounded in market behavior rather than indicators alone. I will give you key takeaways from this book. Firstly, modern Wyckoff logic as a market behavior framework. A central theme is using Wyckoff not as a set of rigid patterns, but as a way to interpret intent and effort versus result. The method encourages readers to view price movement as the outcome of campaigns by stronger hands seeking liquidity and favorable inventory. The book emphasizes the classic phases and events associated with accumulation and distribution, while reframing them as repeatable decision zones, where participation increases, where volatility expands or contracts, and where false moves are used to trigger stops and attract the wrong side. This perspective shifts analysis from predicting to assessing probabilities. Instead of asking, "What pattern is this?" the reader is guided to ask, what is the current environment, who is likely in control, and what must happen next for the bullish or bearish thesis to remain valid. That logic also ties to practical planning, defining the range, identifying the key boundary levels, and waiting for confirmation that the market is transitioning from balance to trend. The outcome is a structured narrative that can be applied across instruments and timeframes, helping traders avoid taking signals in the middle of noise and focus on areas where larger participants typically act. Secondly, structure reading, ranges, breakouts, and spring upthrust behavior. The book highlights structure as the backbone of decision-making. Ranges are treated as arenas where positions are built and where manipulation can occur through false breakouts. Readers are taught to map a trading range, recognize its internal tests, and identify the moments that reveal either absorption or genuine directional strength. Key Wyckoff-style events, such as a spring below support or an upthrust above resistance, are presented as structural behaviors that can be evaluated with context. The important point is not the label, but the implications. A failed breakdown that quickly recovers can indicate trapped sellers and demand stepping in, while a failed breakout that reverses can indicate trapped buyers and supply overcoming demand. The book also stresses the difference between structural confirmation and early anticipation. It encourages planning entries around clear invalidation points and using the structure itself for risk placement, rather than relying on indicator thresholds. By focusing on how price interacts with prior highs and lows, mid-range levels, and the edges of balance, the reader gains a repeatable approach to locating asymmetric trades, where the distance to invalidation is small compared to the potential move if a transition to trend occurs. Thirdly, volume as effort, linking participation to outcome. Volume is treated as a measure of effort that must be interpreted alongside the resulting price movement. The book uses this relationship to help readers distinguish between moves driven by real participation and moves that may be fragile. When volume expands but price fails to progress, that mismatch can imply absorption, where opposing orders are quietly taking the other side. Conversely, when price travels efficiently with supportive volume, it can signal initiative activity consistent with a developing trend. This effort versus result lens becomes especially useful at structural boundaries and during tests. A test with reduced volume after a sharp move may suggest that the prior opposing pressure is weakening, while climactic volume near the end of a swing can hint at exhaustion and potential reversal. The book also connects volume interpretation to trader behavior, showing how emotional activity often concentrates near obvious breakout points and how that participation can be exploited by professionals seeking liquidity. Practically, the reader is encouraged to incorporate volume checkpoints into a trading plan. What volume behavior would validate a breakout? What would warn of failure? And how volume changes during pullbacks can help time entries. This creates a disciplined method for filtering trades and managing expectations. Fourthly, volume profile, locating value, imbalance, and high probability levels. Volume profile tools are presented as a way to see where the market has accepted price and where it has rejected it. By organizing volume by price rather than by time, The profile highlights high-activity nodes that often behave like magnets and low-activity areas that often act as fast lanes for movement. The book uses these concepts to improve level selection and trade planning. Instead of drawing arbitrary support and resistance lines, the reader learns to identify zones of value, the point of control, and the edges where acceptance may flip into rejection. This can help in both range and trend conditions. In ranges, the profile supports the idea of balance, with trades framed around rotations from one edge to the other. In trends, profiles can help locate likely pullback areas where prior value may serve as support or resistance. The method also ties back to Wyckoff. Acceptance and rejection can be interpreted as evidence of accumulation or distribution processes. Importantly, the profile is positioned as context, not a signal generator. The value comes from integrating it with structure and volume behavior to define where to act, where to avoid trading, and how to set realistic targets based on the market's own areas of interest. Lastly, order flow and execution thinking, from analysis to trade management. Order flow is used to bridge the gap between higher-level context and actual execution. The book focuses on interpreting buying and selling pressure, aggression versus passivity, and the idea of absorption near important levels. This helps readers understand why price sometimes stalls, why it snaps back after probing a level, and why breakouts can fail even when they look clean on a simple chart. The approach encourages traders to treat execution as a decision tree, define the scenario, wait for the market to show its hand at a pre-selected level, and then manage the trade based on whether participation confirms or contradicts the idea. Risk management is embedded into this thinking. Entries are framed around clear invalidation, and trade management focuses on protecting against the common failure modes of Wyckoff setups, such as premature entries inside the range or chasing late-stage moves. By combining structural planning with order flow cues, traders can refine timing, reduce unnecessary exposure, and improve consistency. The reader also gains a more professional mindset, patience for location, clarity on what evidence is needed, and a focus on repeatable processes rather than one-off predictions. That shift is often what separates intermittent wins from durable performance. In conclusion, this book fits traders who already understand basic chart patterns, support and resistance, and common indicators, and who now want a more professional framework for reading markets. It is especially suited to discretionary traders in futures, forex, crypto, or equities who need clearer rules for context, timing, and risk placement than typical indicator-driven systems provide. The practical benefit is the way it unifies multiple lenses into one decision process: Wyckoff structure to define the environment, volume to judge effort and participation, volume profile to locate where value is building or breaking, and order flow ideas to refine entries and avoid common traps around liquidity. That combination can improve both performance and confidence because trades are planned around observable behavior and clear invalidation points. Compared with similar books that focus only on classic Wyckoff schematics or only on volume profile concepts, Wyckoff 2.0 emphasizes integration and application. It aims to help the reader build a repeatable routine for preparation, execution, and management rather than collecting disconnected tools. For buyers looking for an advanced market mechanics-oriented approach, it offers a compelling step up from generic technical analysis guides and can serve as a long-term reference when conditions change. If you would like to support Rubén Villahermosa, you can buy the book through the Amazon link I provided in the podcast description. After reading the book, please let me know what you think and share your thoughts. See you around.